Good afternoon and welcome to this second webinar organized by the International Business Tax Center at the European University in Rome. Good afternoon and welcome from my side first on behalf of Professor Marco Fazzini, co-director of the center, and on behalf also all our speakers today. Today we have chosen the topic of intercompany services and management fees and beyond. Why we have chosen this topic? Because we believe that there are still many challenges in practice about this topic, and all these challenges are due not only to the lack of, let's say, detailed guidance based on Chapter 7 of the OECD Guidelines, but also, I would say, for many other reasons, like definitely the increasing complexity of the business model itself, of different multinationals, but also for certain inconsistency among the, the transfer price, the domestic transfer price rules and the tax audits. So, of course, in all these situations, definitely the role of the OECD is a key role, because since we do not have a clear guidance of certain topics, this can create certain uncertainties in practice that the multinationals have to address on a daily basis. So that's why we we thought that this is definitely a classical topic about intercompany transactions, but still not fully covered, or at least still with some huge important tax aspect to be addressed. A benefit test, the supporting documents, and so forth. So we have many of these aspects that we'll be addressing today. And as we did last time, the structure of the webinar is the following. We start from Emanuela Santoro, actually the Regional Tax Director of Coca-Cola Hellenic Bottling, who actually will be proposing a specific case study for this webinar. And then we go with Professor Moreno from University Carlos III of Madrid. We actually will be addressing with him in a broader manner the same intercompany transaction matter. With Professor Sornosa, always from University's Carlos III Madrid, we will discussing about about the public consultation in 2018 from OECD, if whether or not there is updates on that site. And then we go again with the multinationals, and we go with Dr. Ferrari, Head of Tax Pirelli, and Taglioretti, Head of Tax Prometheon. We will be discussing again based on a specific case study, always following the reasoning after the first case study proposed by Emanuela Santoro. And then at the end, Professor Schueri, who will be reacting on the topic proposed by Taglioretti and Ferrari, always about intercompany transactions. Said so, I will just inform all the participants that if you have any question, of course, feel free to use the Q&A, and we will be discussing and sharing the questions at the end of this webinar. So let's start with the first contribution from Emanuela Santoro. She will be talking about management fees, tax issues, domestic perspective versus OECD TP Guidelines. Please, Manuela.
Thank you, Gianni. Thank you. And I start sharing my screen. Meantime, thanks a lot for inviting me for this webinar. It's a very interesting topic, and I'm happy to have the opportunity to discuss with the all panelists. So just confirmation if you are okay. So before going, as you mentioned, we'll discuss about case study. Mainly, I would like to address which are the main tax issues related to intercompany services, and in particular to management fee that multinational company has to face in Italy. And as we will see, I will try to just to discuss briefly about the framework, and I'm referring to the OECD guidelines and somehow also to the Italian legislation, and I would say not to the Italian guidelines because actually we don't have it. So let me first introduce the topic. Why management fee, intercompany services, and again, specifically management fee are so important. It's very common for multinational to have, to well-structured multinational to have a single group company who is acting as a servicing company, so who is providing services to other company of the same group. The reason why the multinational structure in such a way, some very often are far away from tax reasons. It's more linked to business reason. So very often there are centralized service providers who are providing, let's say, consistent services among the group and try to standardize the procedure among the group. And of course, also the reduction of costs is one of the reasons who has pushed many organizations to have a center services, company services providing routine services to the other subsidiary. I just want to point it out, but I'm sure this will be discussed in more detail in the next part. That terminology, it's very important in this area. So in my presentation, we're only discussing about management fee related to managerial services, because we will see also that in the Italian practice, and also discussing with the tax authorities, and also in the case law, sometimes there are even confusion about wording. So again, even if the reason why multinational companies are charging and are structured in a way to have a center service company providing services to other subsidiaries, mainly not the tax reason, this is a very common issue during the tax audit, with a very straightforward consequence that deduction is often disallowed. And this, if we look from the point of view of the receiving company, but of course there is the point of view of the servicing company providing services that has to apply the right arm's length remuneration. And we will see, I think, afterwards how this issue may become even more complex when the nature of services moves from simple and routine servers to more sophisticated services. Let me very briefly set the framework. And since we are talking about intergroup services involving company who are based and resident in different countries, of course, we need to make reference to the OECD guidelines. Last version, but also in the previous version, the OECD acknowledged that this is a very common practice, and the cost that there could be, let's say, services, the cost of providing this kind of services may be borne initially by a parent of a specially designated group member. So it's a very, let's say, since the beginning in the OECD guidelines, this practice has been acknowledged and addressed in very detailed manner, I would say. But just briefly to summarize, which are the conditions set by the OECD guidelines to allow let's say, to allow the service provider to recharge the cost to the other group company. First is the benefit test. So the service has been effectively provided, and the service has to produce a benefit for the receiving company. And we know that this condition can be considered satisfied if the company would have asked into the market for this kind of services. And it's very important in this respect to, let's say, make a clear reference to what are the shareholder activities. So to shareholder services that are the activity performed by the parent company in its capacity as shareholder. And seems the wording very clear, but in practice it is not at all. And in this case, of course, shareholder activities should not be charged to the subsidiary. The second test is the arm's length price. Of course, once the benefit test has been passed, then the amount needs to be charged at arm's length. In the last let's say update on after the BEPS action has been adopted, the OECD guidelines introduce a new chapter with a clear distinction of what can be considered a low value added intra-group services, and this, at least from my point of view, was a very welcome distinction. But actually, this distinction was already made by the European Joint Transfer Pricing Forum in the report dated already 2011. With this new chapter, actually has been introduced a simplified approach. From a multinational, let's say from my perspective, working in a multinational, the idea of having a really simplified approach to reduce the administrative burden in preparing all the documentation benefit test, it's a very crucial point. But what are the low value added services? What we typically refer as management fee, I would say, at least in business context. So there should be services with a supportive nature, not part, of course, of core business, that do not require use of valuable intangible, and do not involve the assumption of creation of significant risk, both for the services provider and the receiving company. So just to make an example, we may discuss about the centralized HR function or centralized accounting, let's say, team, which can provide, I don't know, guidance on accounting principle and so on. There are many examples. Once the simplified test is, let's say, the simplified approach is adopted, this should imply that the benefit test should be simple and quicker compared to other services. And in particular, and this is very important also from a practical point of view, the benefit, so the reason why the cost has been charged to the subsidiary should not be tested on a case by case, I mean on a specific service by specific service, but rather the receiving companies to aggregate a specific category of services and then provide for the benefit test for the category itself. Which means that in practice, you can identify a cost pool, including direct and indirect cost, and then define an allocation key. And then the simplified approach also provides for the markup to be equal to 5% without the need to be justified by a benchmarking analysis. The wording seems very, let's say, to provide a very clear and very simple solution. In practice, this is not the case, and we will see why. From the documentation point of view, using the simplified procedure, let's simplify approach. In the simplified approach, it's also the documentation should reflect this approach, which means that the company, and I'm talking from a subsidiary, Italian subsidiary point of view, who is receiving company from a foreign, let's say, for a foreign company part of the same group, has to provide for sure documentation which explain why the services are considered to be on low value added. Of course, the agreements the calculation that has been made to determine the cost pool, so why some direct and indirect costs are included in the cost pool, and also, of course, the calculation on how the allocation key has been applied to the cost pool. Again, as I mentioned before, this was the approach already that was already explained and adopted by the European Joint Transfer Pricing Forum. And let's say, was interesting to reading again after a few years the report, because the European Transfer Pricing Forum was making reference not only to the guidelines that makes reference to the reviewer, generally speaking, which means both the taxpayer and the tax administration, because I would like to stress the point that once you are part of a multinational group, you are not only subject to the tax audit, let's say, from the tax authorities, but you are in many groups, you are also subject to the internal audit, to internal control. So all this kind of procedure related to the charging of management fee among the group, it's subject also to the internal control. And actually, this guideline provides very interesting point. Of course, first of all, they explain which services should be considered as low value added services, and it's the same, more or less the same definition provided by the OECD. In respect to the documentation, who is the critical point, they suggested that the documentation should be balanced. There should be a balance between the level of information request, and I'm referring also, of course, from a tax audit point of view, with the low risk nature of the services, because we need to take into consideration that providing the documentation during the tax audit and be sure that all the documentation is compliant means that during all the fiscal year, there is a bunch of people working, and collecting the information is not an easy exercise. So the quantity at let's say, the list of documentation that has to be provided needs to be balanced. And this, to me, it's a very important principle that was set in the European Transfer Pricing Forum documentation. There should be, let's say, using the European wording, not disproportionate compared to the aim that we want to achieve. And this, I think, is a very important principle that we need to take in mind. And they also suggest to have internally a sanity check, which means that from an internal point of view, I meaning an internal review, but also from a tax audit point of view, making periodically a sanity check means that you can check if the cost incurred from inter-group services are disproportionate or not compared to the overall operating expense. Another point that was mentioned is that when you are explaining the documentation, your management fee procedure, also a description of the audit standard adopted by the group can be useful to justify and to support the allocation of the management fee. And I will be back to this point also in commenting some Italian case law. Of course, the agreements and the detail of the cost pool is something that it's very common. Another point that was mentioned, very interesting to me, is the integrity of the accounting and auditing system. Again, as I was saying before, during the audit, on the tax audit, this can be very interesting to discuss with the tax authorities, because if you agree that my accounting system and my auditing system is compliant with the law and is structured, maybe this can be a point in favor of the taxpayer. But of course, this is not rule in any official guidelines and any Italian tax provision. Let me brief mention about the Italian law about the management fee. Of course, they are subject to the general principle for corporate income tax purposes. Costs, in order to be deductible, need to be inherent to the business and accrued. And since we are referring to cost charged by a foreign company to an Italian company, so we are talking about international transactions, so transfer pricing, domestic legislation apply, and it's in line with the international arm's length principle. We have the very old but still valid circular issue in 1980 related to the deductibility of charge pertain to services. And again, the two main principles set in the circular are that costs are deductible if you can prove the benefit received received by the Italian company, and that the function are not, the services provided are not classified as shareholding services. I think it's also important to mention that in the recent ministerial decree in 2018, Article 7 also provide for the simplified approach in Italy for the law adding intra-group services, as described in the recent version of the OECD model. And the definition is exactly the same as in the guidelines. Let me just, because again, this simplified approach is it's been mentioned also in the recent regulation issued in Italy about the transfer price documentation, where in Chapter 7, they make reference to the taxpayer who has to provide, if they adopt a simplified approach for intra-group services, they have to provide a list of documentation, but this, of course, will be only for the benefit of reducing penalty, will not ensure the deductibility of the cost. This, at least, is my interpretation. I think this is the right. But let me just go to the point of which are the main audit issue during the tax audit, and just to discuss about the real case. Again, we are talking about the cost for an Italian subsidiary who is receiving cost for a foreign company. What is usually challenged by the tax authority is the lack of documentation in providing the let's say the proof of the benefit received by the Italian company, by the recipient. Assessment sometimes is grounded on the general principle that such costs are not inherent to the activity. And if we go, sometimes also in some tax audit, the tax authorities has challenged that deductibility, again, are based on the general principle of the inherency of the cost, rather than on the basis of the transfer pricing provision. And this is even worse, because we have to remember that if from one side there is a deductibility or non-deductibility of costs, on the other side, in other countries, there is the taxation of income. So if the assessment is not performed under the transfer pricing provision, this may give rise to other issues, like the impossibility to open some, let's say, multilateral agreement procedure or arbitration, because, let's say, they are not grounded on local assessment. And on top of this, this is very also quite not recent, because there are cases also in the past. Once the tax authorities challenge the non-deductibility of the cost, sometimes they are trying also to challenge that also from VAT purposes. VAT, it will be not, the taxpayer will not be allowed to deduct the VAT on such costs, which is completely let's say, a wrong application of the general principle on VAT, because as we remember, under the VAT law, there is no arm's length principle unless we are in a very specific situation. And the neutrality of VAT cannot be challenged unless there are some extreme case of fraudulent mechanism on scenario. So again, one of the main issue again, and this is at least my experience on the last over the last year, the challenge of discussing also with the tax inspector on how to document the benefit and how to document the reason of the cost that has been charged is becoming very challenging. And on top of this, I would say in the recent but also quite old case law, also the Supreme Court has not give us any, I would say, clear guidance. Indeed, the Supreme Court has adopted a case-by-case approach, which meaning that they have decided in a very different way in different cases, sometimes also mixing and confusing the wording. There are cases where the Supreme Court has mixed the concept of management fee with cost sharing agreement, creating a lot of confusion. And there are cases where the Supreme Court has stated that if you have the certification issued by an audit firm certifying that the cost has been accounted in the right way and the allocation key has been determined in the right way, and this certification is issued in respect to the annual financial statement approval, this is a very crucial proof. So you should be fine, let's say, if you have this certification. But in practice, in other case, this has not been considered as relevant. See, let's say, yes, one of the elements, but not a crucial element. So since I think I have like 7 minutes more, if you agree, Gianni, I want to just underline from practical experience the most critical point, looking from the perspective again of a subsidiary, Italian subsidiary receiving costs from a foreign subsidiary, to underline which can be in absence, let's say, in lack of any clear clarification, because so far there are no guidance at all. Based on the practice, what can be the approach? First of all, collecting a good set of documentation imply to increase awareness of people in the organization, meaning not only tax people, because if I need to justify why IT cost has been allocated to other countries, I need to involve also the HR people, HR function, or I don't know, for any other function in the group. So this is something that needs to be spread over the organization. Maybe in light of the recent clarification and change in the OECD transfer pricing guidelines, maybe we can think about to have a threshold, so a materiality, let's say, for which we need to we have to collect supporting documentation. This maybe also a suggestion for the let's say for tax authorities to start working of a threshold, because it's really time consuming for multinational to collect information for single cost, which at the end are not let's say relevant compared to the turnover or to the other operating expenses I would mention before. Of course, documentation, based on my experience, of course, needs to be updated on an annual basis, and this may require, again, a huge effort compared to the, let's say, in addition of the other requirement that we have, meaning the transfer pricing documentation. So this is, of course, on top of the transfer pricing documentation. The documentation needs to be available, of course, at the time of the audit by the tax authority. So, because in my experience, even if you have the documentation, my experience that the tax authorities will not be satisfied for sure, and they will ask a huge amount of additional documentation. So at least to have a first set of documentation at the time of the audit is crucial. And what we should include, first of all, of course, the service agreement, the description of the services provided, the certificate meant, again, as I mentioned, there are some High Court decisions where the certificate issued by an external audit firm was considered a very good starting point to certify the benefit and the allocation key. Of course, the master filing, it's something that is already, let's say, we need to have by default. And of course, the reconciliation of the invoice received and the calculation made by the service provider. But still, I want to highlight, and then maybe we can then discuss with the other colleague from multinational. So far, even if the guidelines being updated, and we will see with the new discussion draft if something will be added. From a pure Italian perspective, this is a very hot topic. It's a very open point for discussion. There are no guidance at all, and it's also very difficult during the audit itself to justify and to let's say find a common ground for discussion with the tax auditors, because it's not only for the tax for taxpayer we don't have guidelines, but also from a tax police point of view, they do not have guidance how to perform specific audit on management fee. And this is becoming very crucial also for the during the assessment, let's say during the audit, but also during the litigation in front of the tax court. So that's all. I don't know, Gianni.
Thank you, Emanuela. Thank you for your presentation. Let me highlight at least 2 points, if I can.
Yeah.
First of all, you were talking about so this is a specific, really practical aspect, but you were talking about increased awareness of people. I totally agree on that. I would even say also increase of the involvement of the people within the multinational and across a specific transfer pricing procedure for the intercompany services or management fees to be built up from scratch. I mean, since we are in lack of specific detailed guidance from OECD, since there is this inconsistency, as we said at the beginning, among the transfer pricing domestic rules, the tax audit from tax authority often in these uncertainties prevails. So in this case, the multinationals need to be fully and strongly organized internally in order to substantiate as much as they can all the intercompany services. So I agree if when you talk about involvement of the people, because you need to involve, let's say, all the stakeholders about these intercompany services. So if, for instance, we have a centralized management fee TP model, and we have guys from IT department or technology department leading for an overall project for the group, they maybe need also to liaise with somebody at the local level in order to implement that overall project in the specific country. So in this case, I would involve the guy in the HQ, and I would even involve the guy at the OPCO level because they are aware. So I would involve them because they are aware about the project. They can provide the further information by the description of the project. Even the local guy can even provide proof where exactly the benefit is. So I would definitely work on that because I think a well-structured TP model for intercompany services would be really helpful for the multinational, waiting, of course, for any update from the OECD. And about the other topic is about the inherence test and benefit test. There is always this kind of, let's say, mix of confusion between the two, especially from Italian tax perspective, as you were saying, and as you experienced so far as understood. I agree, we should be able, and hopefully with the support from the OECD, we should be able to bring the discussion within a transfer price discussion, more the general principle based on domestic tax law. So because if we talk about intercompany services, if we talk about the benefit test, we needed to understand that they need to perform, even for this kind of intercompany services, the functional analysis in order even to find the link between the specific service, even the value chain in some cases of the group. So I think there are at least these topics that you addressed are quite interesting in the current discussion about the intercompany services. And maybe just to conclude, and then we go with the next contribution. And maybe I still know that some tax authorities still asking about the support of the time recording system in order to prove the time spent, the cost, etc. So there are several procedures that we can definitely apply in the multinational, in my view. Anyway, thank you very much.
Yeah, if I may add just one point, Gianni, because you're perfectly right. There are some many practice around different multinational who is collecting timesheet, who is collecting emails, who is collecting. The problem is that in a multinational group, if you have to set a procedure, usually this imply cost of people, timing, and not the consistency among different, because different countries have different approach. And on top of this, you have to commitment. You have to, let's say, again, have a strong ask for a commitment from not tax people to provide you the relevant information. With the, and then at the end, you at least as the situation is now, you cannot assure that this will be fine. This is very frustrating for time being, as let's say, until we will receive further clarification. So despite the effort that you can put in collecting and putting in place procedures, spending money and people, so far you have no certainty that this will be enough. This is,
that's why you were talking about awareness, and I said even involvement of the people, because they need to be involved, because they are the key source of information for us from tax team in order to substantiate the service actually provided. So this is a mindset, of course, to work through, but I see your point. You need also to do interview, to go into the details.
No, again, and you don't know if the tax authorities will be satisfied with all of this venture.
Sure, of course.
This is the crucial point.
The consistency in this case might help. Anyway, thank you, Emanuela. Thank you, Manuela.
Thank you.
And now we go with the next contribution, Andres Baez Moreno. Please, Andres. The floor is yours.
Well, thank you very much. Thank you very much, Gianni, for the organization of this event, and of course, thank you very much for the invitation, to which I think, from the point of view of the format, is a really interesting event in this times we're living, in which we are actually very tired of online things. But I think this fresh format allows us to have a fresh start also in this kind of events after 1 year of non-presentiality. Although I thank you very much for the invitation, I don't thank you so much for the topic, because this obliges me to be kind of carrier of bad news. So I hope that I will escape this event alive, because you know the tendency of killing the emissary is normally very, very intensive. Next slide, please, Alessandro. I'm going beyond the strict topic of intragroup services, or just to be more accurate, I would introduce a new subtopic on the general issue of intragroup services, because as we have seen before, and we will see later, I think with the presentation of Professor Zornoza, I used to be normally a sandwich between two transfer pricing people and persons, and this is happening here. Well, Professor Zornoza is not a transfer pricing person, but he will be performing as such today, because traditionally, beyond the transfer pricing issue of intragroup services, there has been another issue, the withholding tax issue. And I talk here about the withholding tax issue in the absence of a double taxation convention. So traditionally, apart from these transfer pricing issues, which are not only transfer pricing, as we have seen before, there are also other topics as a result essentially from this chapter 7 and of this special regime for low value adding services. The withholding tax issue has been generated by the fact that many countries have in the domestic law withholding taxes on services in the absence of permanent establishment and in the absence of physical presence of the service provider. And normally this has traditionally generated, particularly in certain countries, and I speak here particularly about the experience in Latin America that I know best in practice, first of qualification problems, because many of these domestic rules enabling withholding taxes on services use kind of technical services, technical assistance, managerial services, consultancy services, and this is not exhaustive. This would be like, you know, the animals that my twins want to see when they go to the zoo, but normally, apart from the elephant, the giraffe, and whatever they want to see, there are other various animals. If you go for the IFA Congress report from 2012 that was devoted to this particular topic, you will see that in certain countries you might find dozens of different services or different adjectives to services that may introduce withholding tax obligations with different tax rates. So there is the huge problem of distinguishing what is a technical service, what is technical assistance, what is managerial, what is consultancy. And here I've witnessed in first line a huge discussion in Argentina on particularly on the concept of technical assistance. Apart from that, there was a second problem with this domestic law on the sourcing rules, because here, if the qualification rules are varied, sourcing rules also tend to be very varied, and we might find countries using place of performance and just place of performance, but we might also find many countries using different sourcing rules that sometimes might be straightforward, like the residence of the payer, but sometimes might be everything but easy to apply, like the economic utilization rule that, for example, the domestic law of Spain uses. So actually here we face another domestic tax law problem with services in general, not just intragroup services, which are knowing which is the sourcing rule and distinguishing one sourcing rule from the other, and sometimes applying some of these sourcing rules that are not easy, like, for example, and particularly the economic utilization rule. Next slide, please. But here comes the bad news that I guess that many of the practitioners that are having experiences in Latin America know very well. And the fact is that we assume normally that we are managing a DTC following the OECD model, which sometimes is the case, but in many cases is not true, and deviations are really the evil sometimes in the practice of application of double taxation conventions. And there are, in fact, many treaties containing source or attribution of taxing rights to the source state using normally a payer rule sourcing on gross taxation of cross-border services in the absence of PEs and also in the absence of physical presence of the service provider. I will not dare to give a number of this. I have one student now trying to map the bilateral treaties that we have in the world, more than 3,000. He's very enthusiastic, and he says that there are more or less 600 treaties that contain these kind of special deviations on services. I think he's very enthusiastic, and therefore he sees these particular provisions everywhere. But what I can say is that I have done myself the mapping in Latin America, and more than 45% of the treaties of Latin American countries contain this kind of provisions. Of course, there are huge discussions on the application of these particular provisions, but normally the battle here is on what is covered by these particular provisions, because here again, as it was the case for domestic law, the terminology and the objective scope of these particular provisions is as varied, and I mention here some particular national practices like the Argentinian one that normally refers to technical assistance or to technical assistance services, like in the case of the treaty with Spain. We also have the typical Brazilian provisions, from which I'm sure that Professor Schwery will speak a little later, referring to technical assistance or technical services, or the typical Colombian deviation talking about technical assistance, technical services, and consultancy services. So what we see here is that in our current treaty network, particularly in certain regions, and I speak here from the Latin American region, but we are now mapping the Asian region and we are finding similar patterns, this might also become a treaty problem, because the treaty might attribute taxing rights to the sole state in relation to services in the absence of a permanent establishment. So in addition to the transfer pricing problem, in addition to the domestic law problem to which we referred before, this might also become a tax treaty issue. Next slide, please. The UN Tax Committee tried to put some order in this apparent mess. And this was the idea behind the introduction in 2017 of a new distributive rule, a new article, which is Article 12A, that is actually very similar to the articles that we saw before. The only relevant difference here is that this provision, this model provision, refers to technical, managerial, or consultancy services. So actually, the main goal of this provision would be to resolve this disparity in the description of the objective scope of this treaty provision, because again, this Article 12A is based upon a definition of source, based upon the payer rule, status of gross taxation in the absence of permanent establishment, and also in the absence of physical presence of the service provider. However, one might think, well, the battles are over. It is clear. Now we have this uniformity that we missed in this big mess that we have in different treaties. Well, the problem again, and I've been thinking that this would be the problem since I first saw the project, that was initially discussed in 2015 in the UN Tax Committee, when it was stated that the objective scope of the article would not be services as such, but technical, managerial, or consultancy services, because of course the big battle here, apart from other more technical and specific battles, is what is technical, managerial, or consultancy services. And here we start to see the interactions between what we have heard until my presentation now and what my presentation brings. There is a general description in the commentary to Article 12A of the UN Model on Managerial Services that you have in front of you. The ordinary meaning of the term management involves blah, 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 blah. And this would in principle not be problematic. However, the biggest problem with this Article 12A was, in my opinion, introduced by the very commentary on Article 12A, because you might see there, particularly in paragraph 62 and in the examples that try to illustrate this statement of paragraph 62, and statement saying, well, this provision is just covering non-customized, or sorry, is this covering customized services? So routine or non-customized services would not be technical, managerial, or consultancy services, and therefore they will not be covered by Article 12A. I think the legal basis for this strange distinction or this strange exclusion is not clear at all, but we can go to the debate on this later on. But my question here, and I will leave this as a question because I don't have the answer, and when I don't have the answer, I prefer just to make a question, particularly to the experts, is what this means for intragroup management fees. We have heard before the discussion on this particular simplified regime for low value adding services. And my question here is whether low value adding services and routine services are exactly the same. Because if they are the same, then we shouldn't worry about this intragroup management fees in the context of Article 12A because they would be excluded. So for these services, we would go to Article 7, and our only concern would be the transfer pricing concerns from which we have heard so far. But it is not so clear to me that actually the groups of low value added services and routine services are exactly the same. And in fact, a slide by Manuela before said something saying routine and low value adding services, so meaning that might be or perhaps this might not be exactly the same, this might not be identical. Next slide, please. The end of this story at a treaty level was the new Article 12B that was introduced in the UN Model Tax Convention 1 week ago. This was on April 19th. Actually, this provision has exactly the same structure as 12A. The only difference here, the only relevant difference here is that this new provision refers just to automated digital services. And there is a clear explanation for this. Remember that Article 12A refers to technical, managerial, and consultancy services. Then the commentaries went on, wrongfully in my opinion, but it went on to say, well, routine services or non-customized services are excluded, and this meant that actually Article 12A could not cover main services in the context of the digital economy. So they would be excluding essentially intermediation services and advertising services, which is actually the very core of the digital economy. So actually, this Article 12B was kind of trying to put a patch on the thing that was not working on 12A. And again, it was repeated, or the same idea was repeated. So in as much as Article 12A does not cover these non-customized services, these routine services, these mass services, these CAN services, however you want to call it, we need another article to cover it. Perhaps here, in the context of our discussion on intragroup services or intragroup management services, this discussion is not so relevant. What is relevant is that, again, Article 12B, wrongfully again, in my opinion, but states that Article 12A doesn't cover non-customized services, does not cover automatic services, does not cover routine services. And again, the question here that I leave unanswered, because I think that the answer is not evident at all, and I was in fact talking about this particular issues with Professor Zornoza yesterday, is that actually it's not so easy just to say that routine and low value adding services are identical concept. I think they might be different. They might be management fees or intragroup management fees that qualify for Article 12A purposes, so that we might have theoretically a withholding tax in the source state. Some might not, but again, this is just my general impression, and I leave the question open, as my my contribution here was just bringing the general landscape at the treaty level that we have, and being the carrier of bad news that we have an additional problem here that already started in the treaty network of many, particularly developing, but not only developing countries, and that the UN model could have resolved in 2017 by the introduction of this new provision, but it didn't. Thank you very much.
Thank you, Andres. Thank you very much, because you focus, or at least I would like to highlight a couple of points that you were raising. What about the qualification issue? I think this is the first step actually we should do before going into the transfer price topic itself. Maybe could be, I don't know, that's my view again, could be advisable to start in the reviewing and the updating of the chapter 7 with a proper definition of what we are talking about when we talk about intragroup services, what is a management fees, because now we maybe overuse the term management fees to cover whatever is most of the intercompany services. We need to be more precise on the definition. Let's define correctly what is management fees, what is routine and or low value adding services or technical services. I think that the key role again in this for this purpose can be played by the OECD with the update of the chapter 7. We need guidance, clear guidance on that. And again, also really interesting is also the topic about the sourcing rule, which becoming more and more important on this topic, but maybe we will discuss this later with the other speakers. Thank you very much, Andres. And we go with next contribution from Professor Sornosa about, again, an update, or at least a look about the public consultation for Chapter 7. Professor Sornosa, the floor is yours. Thank you.
Thank you very much, Gianni. First of all, I have to say that I'm not a transfer pricing fan. On the contrary, I'm extremely critical with some of the assumptions that underlies the transfer pricing regime. And for this reason, I think that can be useful to say from the very beginning of my presentation that, in my opinion, the problem of intragroup charges, of the problem of the charges for intragroup services, can hardly have a coherent solution from the transfer pricing point of view, because this kind of services provided intragroup are in nature typical of multinational groups. One cannot find it between independent companies, and for this reason, arm's length principle does not work properly. And I think this is the reason that underlies all the problems that we have to deal with in talking about intragroup services, and that Emanuela Santoro pointed out perfectly. Because intragroup charges are problematic because, in addition to general deductibility requirements, these charges have to meet the transfer pricing legislation deductibility requirements. And as a result of this, is needed determine whether the services have been rendered, was implied which activities do or do not constitute intragroup services, which is a question that has a difficult solution. Second, services must be effectively provided, because the existence of a management fee is not an evidence per se that the services has been provided. The services should generate a utility or benefit to the subsidiary recipient. a question that Emanuela Santoro has explained perfectly, and is related with the so-called benefit test. And there are many forms in which the service can be remunerated, retainers and other forms of remuneration, depending on the nature of the service. A special focus in the documentation should be provided for the deductibility of the charges. And in this point, there are a lot of problems because normally tax administration and the courts, and that is the case in Spain, even if the documentation exists, normally can discuss whether or not the documentation is a valid evidence in order to prove the reality of the services. And finally, we have to determine whether the charge is in accordance with the arm's length principle and to select the method to charge direct or indirect charge as are previewed in the guidelines. The original text of Chapter 7 was included, as probably you know, in 1996, and since then has remained largely unchanged until BEPS project, due as an outcome, a discussion draft in 2014, in which the OECD tried to achieve a balance between the charges for the so-called low value added intragroup services and the protection of the tax base of payer countries. As Emanuela Santoro has explained perfectly, the system, the low value added intragroup services and his regime, probably I can go to the next step. And the next step was the revision of Chapter 7 in the transfer pricing guidelines in 2016 in order to incorporate the simplified approach to determine the arm's length charges for those low value adding intergroup services. But it has not been reviewed in the transfer pricing guidelines 2017 to incorporate the guidance developed under BEPS in order to align Chapter 7 with specifically Chapter 1 and also with Chapter 6 and 8. And the proposal to make this kind of alignment seems to be correct if one accepts the transfer pricing regime principles. But there are a lot of challenges due to the practical application. First of all, demonstrating that the service has been rendered, which can be difficult in some circumstances, and especially to demonstrate that the service rendered provides benefits to the recipient. Second, a distinction should be made between activities which do or do not benefit the local affiliates and the benefit that arise purely from group memberships and the so-called shareholders and stewardship activities. Thirdly, we have to identify in practice duplicate activities, which is a problem specifically in tax matters when you have at a corporate level tax services, and from the corporation tax services, you have to assist sometimes the tax departments that you have in your subsidiaries, and the tax administration can challenge the charges because you are duplicating the same activity when you provide to your subsidiary the tax services from your corporate level. You need to find an appropriate allocation key for charging intragroup services. You have to have a markup that is specifically reviewed in the guidelines. But after the proposal for the revision of Chapter 7, even if it has a lot of useful comments, we are waiting for the proper revision. And I want to focus in the comments that I think could be useful in order to make this revision. I want to stress first that there are a lot of administrative burden that in some cases raised to the companies or moved to the companies to abstain from making the charge and to incur in double taxation because of the difficulties that you can have in order to prove in front of tax audit that the service has been rendered, that the service benefit the subsidiary, and so on. The benefit test, that is to prove that the service has been rendered at the need to demonstrate the benefit for the subsidiary, is probably the most challenging burden. And the question here is if the benefit test cause or not more problems that it solves. Probably in the simplified regime, in the simplified approach for low value added intragroup charges, the benefit test can be useful. But in general, probably this is the most challenging question. First, because to demonstrate a benefit from the point of view that Chapter 7 is not consistent, in my opinion, with the principles underpinning the Chapter 1 guidance. Because, as you probably know, Chapter 1 tackled this issue for all the types of transaction in its section D1, identifying the commercial or financial relations, what in our case means identify the kind of service that has been provided. And in section D2, recognition of the accurately delineated transaction or service that has been provided. For this reason, in the comments that has been made for many law firms, there are some proposals to eliminate the benefit tests from Chapter 7, or at least extend what is required in the simplified approach to all categories of services. Because due to difficulties in order to define what we understand as low value added intragroup charges or services, probably it's not easy to know which kind of services are you providing and if you can or not use the simplified approach in order to avoid the difficulties of the benefits test. One of the proposals that I find can be more interesting is to establish a simplified approach that will entail benefits for tax administration and taxpayer, including more guidance than the one that is useful, that normally you can find both in the guidelines and in the internal legislation. For example, in Spain, we don't have any kind of guidance, even if we have some tax rulings trying to identify how in relationship with some categories of services, you can demonstrate that the service has been effectively rendered. Develop a model legislation as the Action 13 did for country-by-country reporting purposes in order to facilitate its adherent process and implementation could be a solution if we have a potential threshold that could be adopted in this matter. And obviously, it's needed to include more guidance and examples of benefit tests for services that don't qualify for the simplified approach. First of all, we have to solve the difficulties in order to distinguish the low value added intragroup services and other intragroup services. But secondly, it is needed to know how we can demonstrate for the second kind of services that the service has effectively been rendered, especially taking into account the difficulties in the documentation side, because as Emanuela pointed out perfectly, there are a special focus in the domestic legislation in the documentation that should be provided in order to demonstrate that the service has effectively been rendered. There must be preliminary written agreements specifying the nature of the services, the rational allocation keys. There must be invoices for such services. There must be sometimes reports by independent third parties regarding the invoicing, and diverse documentation, including examples of the administrative services rendered. The documentation issue is really a burden in order to solve the problems with the tax auditors in relationship with this kind of intragroup services. And for this reason, I think that should be added warnings and cautions about the risk of requesting unrealistic levels of proof by means of benefit text. We have some experience in Spain about what can the auditors, the tax auditors, consider useful and proportionate documentation pack, because even if you have a narrative or a description that justify the service provision in the context of your multinational group, the experience in Spain is that despite that the documentation that you provide, the tax auditors discuss the deductibility of such expenses, since they consider that the documentation is not enough in order to prove the reality and benefit of the service. Because with some kind of documentation, it is really difficult to prove nothing at all. Documents are just documents, but you don't have the opportunity to use other kind of proofs that probably could be useful. For this reason, I think that intragroup charges will be in the future a problem. And I think that even if we can have specific guidance about some of these questions, even if we can find an appropriate allocation key to charge this kind of services, even if one can solve the problem of the duplication of services, the guidelines should include guidance about how to protect taxpayers' rights. And about this question, I will ask if the guidelines should make a statement about the burden of the proof when discussing the existence of the services, in order to clarify when and in which way the tax auditors can challenge the charges made for intragroup services. Because in our practice, it is common that the tax auditors deny the right to deduct the charges without any kind of proof, denying that the documentation that you have provided is enough in order to demonstrate the reality and the benefit for the subsidiary. And in order to protect the taxpayer rights, probably we have to think about if the mutual agreement procedure can be a solution for the resolution of this kind of controversy. Because if we have, for the deductibility of the intragroup charges, the problems that arise for the legislation of tax on transfer pricing, we should have also the benefits of the mutual procedure agreement in order to solve the problems for the taxpayers. That's all in my side. Thank you very much.
Thank you, Professor Sornosa. Thank you for your contribution, for your efforts. But actually, I don't believe really you did a big effort, because you provided to us many interesting input. Let me summarize just few of them. Definitely, I agree when you say the underlying principle seems to be correct, but the practical application is really difficult. And that's actually the problem we are discussing today. And this is indeed, again, maybe another issue of definition, because when we talk about benefit tests, okay, in theory, we know we have to provide the benefit, the service has been provided, the benefit has been obtained by the multinational, but what exactly we have to prove? But then again, is the problem of definition together with the problem of supporting documentation. So which kind of documentation we have to provide? It's not only about master file, country file, or CBCR report, but it's much more, because we need to prove exactly with many supporting documents to prove which kind of benefit we are talking about. But we need even to understand in advance what is the benefit, how we can quantify the benefit. But another 2 points I want to touch, because you said that in some jurisdiction, business opt to abstain from making the charge and to incur the double taxation. So as long as we don't have clarity, we don't have certainties or a certain definition or certain aspects of the intragroup charges, we have this, so the multinational makes its own decision in order to protect themselves from potential tax disputes on this topic. So then create a double taxation issue. Then this, in my view, can create even inconsistency of the TP model for the entire group. Because if I don't apply to one country, but apply to the other country, because in that country, I don't see any problem with the tax authority or with the tax transfer price boost, I can create inconsistency about the TP model itself. And then this means that I would even, doing so, I would even undermine then the TP policy, the TP structure of the group. So there are certain implications to take into account. And just to conclude from my side for this moment, I really like when you said developing a model legislation as the Action 13 did for the CPCR purposes. Again, I'm really in favor, I'm really looking forward to get this standardized model for the recharge, because if we have a standardized model, this can definitely help the dialogue between tax authority and taxpayers. Thank you very much. Thank you very much indeed for these further inputs. And I would then give the floor.
Sorry, can I add just one comment?
Sure.
Thank you, Professor Sornosa, for your explanation. Just one very important thing that you say: documents are documents. So there is no too much that sometimes we can explain based on documentation. And I would also add one point in this respect. Sometimes internal documentation of business related to business activity sometimes are even difficult to be explained to the tax police or tax inspector, whatever, because they are dealing with very, let's say, business activity. So sometimes, despite the quantity of documentation that you collect, sometimes they are not even readable and easy to be understood by the tax inspector. So maybe we should think again really to the proportionality of the measure compared to the result.
Yeah,
totally agree.
Thank you, Manuela. I see your point. In my view, is always the consistency of the tip policy, of the tip model of the company that can help in this case. More consistent is the policy, more argument you have to support your position. Okay, I think we are quite okay with the timing, because now we have 10 minutes from Dario Taglioretti and 10 minutes for Massimo Ferrari for the joint presentation about management fees again, but they go more into a specific tax topic. Please, Dario, the floor is yours.
Yeah. Okay, thank you, Gianni, thank you, Marco, for the invitation to this event, and good afternoon to everybody. Together with Massimo Ferrari, we will do a joint speech based on some real life tax issues and experiences we have faced in relation to the topic of the recharge of management fees. And please, Massimo, feel free, of course, to intervene along the presentation. What we are presenting today are long-lasting debatable matters involving multinationals with facilities in Brazil in particular, but not only. As regards Brazil, the tax issue arises for management and service fees usually recharged by Italian mother company for the benefit of the Brazilian subsidiary. And we are speaking of the typical staff function costs that already Emanuela Santoro talked about. So, I mean, I repeat, HR, for example, IT, procurement, marketing, industrial planning, and quality. In this scenario, huge tax costs due to Brazilian local taxes, in addition to a withholding tax of 15% applied on service payments, hit the profit and loss of the Italian-based groups. And for whom is not familiar with the Brazilian taxes like ISS, CIDE, PIS/COFINS, with a cumulative overall tax rate in excess of 20%, we are speaking of federal and state taxes, broadly speaking, similar to a certain extent to the European VAT. As regards Brazil, the first issue arises in relation to the 15% withholding tax. Presently, the Italian tax authorities disallow the tax credit.
Sorry, Dario
Yes,
and Gianni.
yes, of course.
The slide deck, we cannot see the slide deck, right?
I was indeed writing to the, okay, now we are.
Okay, great. Sorry. That's
Very good. Okay,
okay.
Thank you, Gianni. Next slide, please. Very good. Okay, so then I was saying that there is the 15% withholding tax issue because presently the Italian tax authorities disallow the tax credit. And why? I mean, although Brazil is not an OECD member, most of the double taxation treaties, including the one with Italy, follows OECD model convention. Nevertheless, the Brazilian Revenue Service has always believed that it was not bounded by these OECD guidelines because Brazil is not an OECD member. Said that, the most controversial point concerns the interpretation given by the Brazilian authorities to the Article 7 of the Double Taxation Treaty with Italy, that is the taxation of business profit, according to which the taxation of the business income is only in the head of the recipient. Therefore, the question is, if the management service has to be considered a business profit subject to Article 7, that is, I mean, again, business profit and taxed only in the head of the recipient country, or has to be assimilated to transfer know-how, technical assistance service subject to Article 12 on royalties, a debate over qualification on which Professor Moreno has already talked about. We can remember about the debate about routine services equal to low valued services or not. So, I mean, is, let's say, a question mark that is still, let's say, open. Next slide, please. Okay, it has to be reminded that in the past years, and I refer to some old guidelines issued by the Brazilian tax revenue in the years 2000 and 2011, there was a position of the revenue service about the application of the Article 22 of the treaty, that is other income, according to which the income not covered by other articles of the treaty is subject to taxation in both countries, leaving open a possible situation of double taxation and the application of Brazilian withholding tax. Such Brazilian interpretation was in the past not shared by other countries, and tax authorities denied the tax credit for such withholding tax. Also because is disaligned from the OECD Model Tax Convention Article 21. So where we are now, the nowadays situation can be summarized as follows. According to the Brazilian Revenue Service, and I refer to a specific declaratory act of 2014, which followed a non-binding opinion released in 2013 by the Brazilian National Treasury Attorney Office, no withholding tax of 15% should be applied on services rendered by residents of treaty countries without any transfer of technology. And therefore, Article 7 should be applied, that is, if there is no recognition or assimilation of transfer of technology with the transfer of know-how or technical expertise or assistance. Recently, on December 15, 2020, the Supreme Court in Brazil has confirmed the position of the Brazilian revenue, but the decision is not yet definitive. Therefore, both the Supreme Court and the Revenue Service have ruled that the business profit article of the treaty prevails over domestic legislation with respect to payments that do not involve transfer of technology. But as far as we know, due to the fact that there isn't in Brazil in place any so-called pilot case under discussion, in order not to apply the withholding tax, the Italian parent company would have to file a specific lawsuit requesting the treaty to prevail and Article 7 applied to the management fees recharged to the Brazilian subsidiary in order to obtain a favorable decision, not only, but also apply the decision retroactively in order to obtain the refund of the withholding tax paid in the last 5 years. And as far as I know, this is exactly what Pirelli did in past years. Massimo, correct me if I'm wrong, but you follow such, let's say...
Sure, correct, yeah.
And so, I mean, due to the very long time to obtain a decision and the uncertainties over the outcome, sorry, next slide, please. Okay. the Italian parent company is therefore, let's say, in a certain way, forced to still consider applicable a withholding tax of 15%. And as a consequence, no tax credit is available so far for the Italian parent company due to this disalignment in the double taxation treaty application, that is, which is the correct article to be applied. So in this scenario remains therefore some open points because the first one is the definition of technical or non-technical services, prevalence of the interpretation given by the Brazilian local law in case no guidance is given by a double taxation treaty. And in this respect, I'm keen also to see what Professor Schueri can tell us about in his following speech. And also the possibility to achieve in short time with the tax authorities of both countries an interpretative mutual agreement procedure that apparently seems to be achieved between Spain and Brazil. Is something feasible? There are some other effective way out alternatives. So there are some question marks that I leave to Schueri to explain to us if he can, let's say, clarify to us what we can do in order to expedite this, let's say, situation and a final clarification. In my presentation, I have, in addition, next slide, please. Okay. So sorry, the first one. The first one slide, if you can. Yes, thank you. Thank you. Well, in our experience, we have faced another issue.
Sorry, just to look at the timing. Sorry, I don't want to interrupt you because we are already beyond 10 minutes. But
yes.
Go ahead.
Yes. In a couple of minutes, I think that we can finish. Okay, so there is another topic involving the recharge of management fees. That is, okay, in Brazil, there are local taxes, as I said before, and in some specific circumstance, there is a possibility to obtain a credit on such a federal tax named PIS and COFINS, because Brazilian law allow local taxpayers to benefit from PIS COFINS credits on imported services at certain conditions. That is, if such acquisition of services are used in connection with production and manufacturing of products and goods to be sold. This tax credit, of course, mitigates in a certain way the overall tax costs suffered by the Italian mother company, as I have outlined at the beginning of the presentation. But of course, there are still some constraints and problems. Next slide. Okay. The lack of a precise definition, because I mean, the law seems not to give a precise definition. What about are, let's say, services related, strictly related to the production or not? There is a Supreme Court of Justice position, that is, the services essential, relevant for the, let's say, production process may benefit for the, let's say, tax credit, and this credit is allowed also to underwrite costs. But the tax authority interpretations seems to be more stringent because there is a restriction in the concept of core services only for services effectively relevant and strictly used in the production process, excluding the services used after the production process. So excluding, for example, packaging, transport, after sales services. So we can say that also for, let's say, an effort to mitigate the tax burden for local Brazilian taxes, Still, the companies have big efforts required in order to try to mitigate the risk of assessment. That is, identification of what are core or non-core services, a separate intercompany agreements, separate invoices, separate accountability for each service identified, supporting documentation, and others. So, I mean, all, let's say, such, let's say, burden are on top of the problems I have depicted so far. And then I know that Massimo, and next slide, there are, can, let's say, outline also other real-life experiences in other jurisdictions. So I leave the word to Massimo.
Thank you very much, Dario, and thank you to Gianni for the invitation. I am very conscious of timing, so I will try to strictly stick to the time that I have been assigned. So before entering into my slide, I have very few slides, just a comment, because really many concepts and principles have been stated so far, and I have listened with great attention. We are speaking not today about Pillar 1, Pillar 2, Biden plan to change the world in international taxation. We are at the basic here today in this seminar, truly the basic. There is no kind of aggressive tax planning or abuse law. We are at the basic. And the focus so far has been on the guy, the company, the people receiving services. I must prove that it is for my benefit. I must prove that they are documented. Then the price is arm's length. What about the other guy? What about the other guy? The service provider. We are headed, we have our head office here. So we have in Italy the issue of Emanuela. Sorry, you need to prove that it's benefit for you. And then it's my problem saying, no, guys, this is not for you. It's for the German or the Brazilian or the Russian or whoever. So it's really, really a disaster, if I may, in this area. It should be very simple, extremely simple, with some kind of very, very basic rules, but this is not the case. And by the way, if we speak about benefit test, what does it mean, benefit test in this area? It doesn't make any sense to me. Documentation, what is it? This is absolutely mission impossible in real life. We can speak for hours in this context. It's mission impossible. What is the benefit? If I have a central marketing department, it is clear that it works for all my subsidiaries. What should I prove? That doesn't make any sense to me in international taxation. Then let me say that double tax treaty, and I jump into my topic. We have the problem, even if, as Andres was correctly saying, if we do not have a double tax treaty, but we have the problem also if we have the double tax treaty, which is again a disaster, because the double tax treaty do exist, and are signed just for one scope, to prevent double taxation. And when I simply hear that some multinational company take a crazy decision not to charge in order not to have problem, please don't let me comment on this, because this is really the failure, absolutely failure of the international tax system. As simple as that. Now, moving to deductibility, benefit test, and so on and so forth, to really the aspect that Dario has rightly already pointed out. So Brazil, just Brazil, very interesting country. You could say, well, fantastic. There is a court system. Why don't you go to the court? You file an appeal in Brazil. Can you file it? Absolutely yes. And then you wait 5, 10, 15, 20 years, and probably you get an answer. So it's not a long story. It's a never-ending story. And then you might end up in a judge who say, no, it's not Article 7. It's not even Article 12. It's Article 22, other income. And so I apply withholding tax. So really, really tricky. And by the way, I don't care. Really, I really don't care whether it is Article 7, Article 12, but it must be Article 7 or 12 for both. Who cares? Article 7 or 12, I don't care. There is a double tax treaty. If the Brazilian qualify it as Article 12, it must be Article 12 for the Italian as well. And then I am happy. I suffer a withholding tax, I recover a withholding tax, maybe also with a deemed tax credit. Fantastic. But this is not the case. Article 7 in Italy, Article 12 in Brazil, and we are in the middle. Then if I look to Argentina, Andres was already clear, said, well, we have an issue, again, technical service, not technical service, but we have another interesting, interesting and real life today, on the 28th of April, that if technology is, or someone claimed that technology is embedded, whether it's royalty, whether it's central service, I don't care. There is technology transfer. You know what? In Argentina, you can claim a deduction when you pay. Cash principle. In OECD country, not necessarily in Italy, of course, when you book the revenue in your profit and loss, right? Which should be right. But the issue is, you could say, well, what is the problem? It's a timing difference, right? It's just a timing difference. No, it's not a timing difference. Because if you want to pay today in Argentina, sorry, impossible, forbidden, no way. Because due to the crisis in Argentina, you don't get the authorization. And so I want to pay. I am the Argentinian. I want to pay. No, not possible. And so I cannot claim the deduction. The other guy, the service provider, is taxed. Again, double taxation. And what happens if in 1, 2, 3 years, the Argentinians say, okay, authorization from now on, permanent, double taxation. So, and this is, but let's move, and then I stop absolutely. Let's move into Europe. You say, wow, that is Argentina, it's Brazil, very, very specific issue. No, this is Europe. And what Emanuela described is absolutely real life. So I don't need to fly over the ocean and land in Sao Paulo. I just cross the border here and they go to other very sophisticated countries in Europe and they face the same problem. Benefit test, documentation. Now this is shareholder cost. So it's really a nightmare. What can we do? What can we do if you are the head of tax of a large multinational? What should you do? Next slide, please. Honestly, not very much. So first of all, what we should do is to raise question to OECD, European Commission, professor, let's say academic scholar, and which is one of the purpose why we are here today, right? So is there effective, available, and I have highlighted in red, remedies, no theoretical remedies, sorry, not for me, no academic remedy, not for me, effective, available remedies. Now, to be very pragmatic, what one can try to do, and it has already been stated by the others, let's say speakers, is at least, let me obtain a certification from an accounting firm on the amount charged. Of course, in many jurisdictions, and not speaking about Italy, many, this is good. In the sense tax authority, generally speaking, respect, at least in terms of accuracy, but not about benefit test. Who cares if the charge is right? The point is that you could have rightly charged something which is not for the benefit of the recipient. So it solves just one problem. The other one is ask for a unilateral advance pricing. Why unilateral? Because of course it does not make sense to speak about bilateral, because you should have, I don't know, 20, 50, 100 bilateral, doesn't make any sense. Or multilateral, again, with whom? 10, 15, 50, doesn't make any sense. A unilateral advance pricing agreement where at least one tax authority, the one of the head office, say, okay, not too bad, I agree that this charge is right, should help on both accuracy side and on the benefit test. And then, and they finish, go for a map. Of course, we're available, but go for a map because the map should put the two countries on the same page. So we can, of course, discuss for hours. So I stop here and I leave definitely the floor to Luis, that I am sure will propose a solution. Thank you, Gianni, and thank you, everyone.
Thank you, Dario Taglioretti. Thank you, Massimo Ferrari. And I straight go to Professor Schueri, please.
Thank you, Gianni, for the invitation. Thank you, Marco, for the invitation. It's so good, and thank you for being the last one to speak. That's also easier because most problems have already been issued, and also some answers have been presented. And I'm sorry for talking about the Brazilian perspective, and I always like to say I'm just a messenger. I have not created the Brazilian tax system. But unfortunately, I must say that some of the optimistic presentation which was made is more optimistic than one would believe. For instance, it was said here that according to the Brazilian position in the Declaratory Act number 5, that services without any transfer of technology would be under Article 7, no withholding tax. Sorry, this is not true. I have even, after I saw your slides, I even got the Declaratory Act to read it once again. And when one reads the Declaratory Act, this is of course the Brazilian authorities, it clearly says, irrespective of with or without technology transfer, so the act is for both of them, irrespective, it says, well, you will apply Article 12 if the protocol has a provision that technical services and technical assistance have the same treatment as royalties in the treaty. Then it says Article 14 in case of independent professions. Then in the last case would be Article 7. So only if there is no protocol. And when you get the protocol, Brazil, Italy, you get number 5 of the protocol, saying, with reference to Article 12, paragraph 4, I'm quoting here, the expression for information concerning industrial, commercial, or scientific experience mentioned in paragraph 4 of Article 12 includes income derived from the rendering of technical assistance and technical services. Thus, according to the Brazilian official position, if you have in the protocol such a provision, you would have an extension of Article 12 also for technical services. So please expect Brazilian authorities to demand this withholding. And also, the Brazilian Superior Court, not in a final decision, as you mentioned, but has indicated that they would confirm this position. As a matter of fact, they asked to return to see what the facts were, because the facts were not clear in the case and so on. But at least the justice who made his opinion said, well, what I'm seeing here is that Article 12 might be applicable. So he has not. So he asked just to check the case, but it's not a denial. So I would not also be optimistic considering the Brazilian courts so far. What is true is that the Brazilian courts, this is true, in a Copema case several years ago, dismissed the possibility of applying Article 22. This is correct. So the other income article. But presently in Brazil, you would expect the withholding and quoting this declaratory act. This being said, you have asked me, well, what would be a solution for the case? Of course, there are two kinds of solutions. From a Brazilian perspective, from Brazilian authorities, I will expect no change in the present moment. You could, of course, discuss this with Brazilian courts, claiming that this interpretation of the tax authorities is not the best interpretation. You could claim, and I would even support you, you could claim that by the time the treaty was signed, it was not an intention of the parties to extend Article 12 to technical services, but rather to say that also in technical services, there may be royalties. This is a possible interpretation, not a wrong one, but there is no precedent in this. And as you said, this would be a huge discussion. Another possibility of discussing, if you believe that Brazilian courts are long-lasting, then you have another possibility. you could bring the case before Italian courts, and then you could claim a different argument. You could say, well, there I have a treaty, and I have an expression in the treaty, which means technical services, which was not defined in the treaty itself. According to Article 3 of the treaty, the party applying the treaty is entitled to define it according to its internal law. And Brazil did so. And according to Brazilian internal law, technical services is an expression which includes with or without technology. So you could claim first that Brazil applied the treaty accordingly. That means Brazil applied it following Article 3, which it was allowed to. And Italy, on the other hand, has another article to apply, an article which refers to the methods to avoid double taxation. And now allow me to quote once again the treaty to see what is said here in the treaty, Article 23. If a resident of Italy owns an item of income arising in Brazil, sorry, it's not this one. Where a company yes, it's this one. If a resident in Italy owns items of income arising in Brazil, Italy, in determining its income taxes specified in Article 12, Italy may include in the basis upon which such taxes are imposed the said items of income, unless specific provisions of this convention otherwise provide. In such a case, Italy shall deduct from the taxes so calculated the tax on income paid in Brazil, but in an amount not exceeding the proportion of the aforesaid Italian tax which such items of income bear to the entire income. So we have a tax paid in Brazil, and there is a possibility, if the tax is paid in Brazil, Italy shall deduct. Moreover, item 4, for the deduction mentioned in paragraph 2 of this article, Brazilian tax shall always be considered as having been paid at a rate of 25% of the gross amount. Then is here C, for the royalties. So I would claim that according to the treaty, Brazil has withheld the tax according to the treaty, and so the Italian party may deduct these taxes, and not only the 15%. I can see a good argument for the 25%. So I cannot agree also with you when you said, for me, it's irrelevant whether the taxes was paid in Brazil or in Italy. Sorry, if you apply Article 7, you'll pay taxes in Italy, normal taxes. If you apply Article 12, you have a matching credit. You get a credit of 25%, so it's not that irrelevant. Going further, and just to finish this, well, but I don't want to discuss this in courts. I want to have a rapid solution. Then yes, a map could be applied, and a map between all tax authorities. We have an example in Brazil with Spain concerning Article 12, in which both Spain and Brazil declared that technical services shall be deemed to be included in Article 12 according to the protocol. And Spain does recognize the credit, even the matching credit in this case. So we have at least one experience with one European country, with a Latin European country, very close to Italy, very close reading in the treaties with this recognition. So I would not dare to say that the interpretation Brazil presently has on its protocol is something absurd. At least Spain recognized this as a possible and even correct interpretation. So you could claim this before Italian authorities to ask for the map. I should add that in the past, MEP in Brazil was very rare, and the Spanish case was a very rare one. However, due to BEPS, Brazil assumed a compromise to improve its rulings on MEPs. And since then several MEPs have been installed, most of them in transfer pricing. But I would say that this is a process running presently. And I would say that I would even dare to say that Brazilian authorities are eager to have positive outcomes in MEPs, just to show their colleagues that Brazil is presently adopting the MEP as Brazil has promised. So I would say that the climate is good for MEPs presently. This could be a rapid solution. Concerning to the PIS/COFINS issue, which was another issue, well, I would say I'm less optimistic to say that you can get the credits and so on, because according to the legislation for PIS/COFINS, you may not get all credits on all imported services, but as you say, services used in connection with the production and manufacture of products. This is according to the text of the law, and I cannot change this that much. I mean, it's not a complete VAT. It is a service which is used for producing something. I would add that despite the reading of the law, there are some decisions which have broadened the text, I would say more than one can find in the text, and which have allowed credits for goods and services, mostly services, which were not connected to the production of goods. For instance, if you have a commercial firm which produces nothing, simply buys and sells, these commercial firms have been allowed to get credits also for services which have been rendered for them. So after these decisions, which go beyond the text of the law, I would say that maybe you can find a solution here, but just to inform you, the text of the law says production. So the decisions go beyond, but their decisions do exist. I think that the timing I had, these were the main answers I could give, the main comments I could give. I'm at your disposal to clarify anything else. Thank you once again, Gianni.
Thank you, Professor Schwery. Thank you for this reaction on the topic proposed by Pirelli and Prometheon. And I know that Andres wants to add something on this topic.
Yeah, me too, if I can later, Gianni. Thank you.
Sure. Andreas.
Thank you, Gianni. And if you allow me to mediate and in a polemic between Brazil and Italy, having in front of me Luis Schwery and having in front of me Dario and Massimo, but I think that the reasoning of Professor Schwery is perfect, but for one thing, if you get to find a clever tax authority in Italy, they might say, okay, Professor Schwery, you're right. Brazil might be applying correctly the treaty because according to 3.2, they are applying their domestic concept of technical services. But what if they say, well, unless the context otherwise requires, so technical service is not a domestic law concept, it's rather an international treaty context. So you are totally outside the context of the domestic law of Brazil, and the interpretation of the concept technical services by the domestic tax authorities in Brazil is wrong. I think here that perhaps the best way would be to try and convince the Italian courts that the Brazilian authorities are right, not just according to the domestic law, but according to treaty law. Because look, if you look at the treaty between Italy and Brazil, but not just at the treaty between Italy and Brazil, that's very common in Brazilian treaties with very few exceptions. And please, Professor Schwery, correct me, I think Japan is one of the exceptions. Sweden used to be one of the other exceptions, but they are very few. They have this protocol saying, well, royalties are also extended to technical assistance and technical services. And then we have the discussion. What does it mean? Does it need transfer of technology? Yes or no? And here we have the big discussion. But here I think there is an argument. Look, Article 12 of the Italy-Brazil Treaty contains a concept of royalty. And at the end of this concept, which is the normal concept in the OECD model, and I will read here, it says, well, royalties cover blah, 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 or for information concerning industrial, commercial, or scientific experience. There is, I would say, a universal agreement interpreting that this means know-how, so transfer of technology. So if transfer of technology is already covered by the canonic concept of royalty under Article 12.3, what do we need these protocols for? They would add nothing at all. I know that Professor Schwery will come up here with a historical explanation and Rui Barbosa, all this story. But you can say, well, an interpretation that leads a provision to be totally absent of any sense and adding nothing to a treaty or to whatever legal instrument cannot be right. So if we say, well, what the protocol is saying is transfer of technology, then we don't need the protocol because this is already covered by 12.3. And this is not something that Brazilians are saying or that I am saying. This is something said in the commentary to the OECD model, in the commentary to the UN model, and everyone makes this interpretation. So I would rather, or perhaps as a secondary argument, add it to all that Professor Schwery has said, that I share 100%, saying, well, but the Brazilian tax authorities are correct in interpreting that. It is correct according to the treaty. So if either you go through the domestic concept of technical service or you go for an international meaning of technical services, both of them cover this withholding tax. So Brazilian authorities are correct. So you Italian authorities must grant the credit, because if you don't do that, then you're not complying with your obligation according to Article 22. It's 22 in the treaty, I think, of the treaty. So adding something more.
Thank you, Andres. Thank you, Andres. We are beyond the timing, but of course, Massimo, Dario, if you want to add just 1 minute.
Yes, 1 minute, 1 minute. Well, first of all, absolutely very valuable and interesting. So this is the first comment. Well, I am unfortunately a bit less optimistic, if I may, being doing business in Brazil, if I may, because I fully appreciate that there is a precedent between two countries 18 years ago, Spain and Brazil. 18 long years has elapsed. I'm not aware of anything else. So good for the Spanish, but not for the rest of the world. Second, I am also very glad to hear that Brazil is opening to the OECD and to the MAP world. Absolutely, genuinely happy. But when I see the first MAP with Italy, I would be even more happy, because so far, if I am right, but please correct me, there is no way to sign an MAP between the Italian tax authority and Brazil, real life. Then if you say, no, but they are opening and maybe in 3, 5, 7, 10, 25 years, they will come, I would be even more happy. That's just from a pragmatic point of view.
Thank you, Massimo. Dario, you want to add something, and then we go?
Oh, well, yes, no, thank you so much, Professor Schwery, and I completely aligned with Massimo. I mean, exactly the situation we face. I mean, I do not expect Brazil can, let's say, sign in a short time any MAP or other kind of agreement. So unfortunately, we now are facing a situation which we faced 20 years ago. That is still unclear, the treatment of management fees. Yeah, that's all.
Many thanks to all of you for the contributions. I think we collected a lot of inputs, and I give the floor for the conclusion to Professor Fazzini. Thank you very much from my side.
Yeah, thank you, Gianni. Just a few words, because we are at the end of our meeting. So I think that everything was really interesting, because we have listened to different suggestions and different points of views, and both from academic and practical perspective. I found the last speech very interesting, because it means that the matter is really complicated when you want to deal with it in a practical way. And what you can do right now is to thank you all our speakers, and to say goodbye to the next appointment that we are going to have next month. And we are going ahead on our track, talking about international taxation with our International Business and Tax Center. So thank you to everybody, and see you next time at the next appointment. Thank you. Bye.
Thank you very much. Bye-bye.
Thank you. Thank you. Bye-bye.